Welcome to this video brought to you by Mortgage Educators and Compliance. Why should you watch this video? To start with, many people ask questions like, what's on the national test? Or what kind of questions do they ask? While others not sure if the mortgage industry is right for them can also use this video to help gain some understanding of what's it all about, regardless of your reason. In this video, we're going to review sample NMLS SAFE Act mortgage licensing test question. Now, some of these questions might have an easy answer, while others you might have to put a little more thought into. In this video, however, we take an in-depth approach, offering you a unique insight to the test questions and actually taking the test. So just as important are the questions as is the insight we give concerning the test itself. So you'll want to be sure to watch this entire video and even watch it multiple times to ensure you have this important understanding. For those looking to get into the mortgage industry, Mortgage Educators and Compliance, or MEC for short, offers everything you need to prepare you to become a licensed mortgage loan originator. From the 20-hour pre-licensing course, including all state-required courses, in an online self-study version, or a live webinar with one of our most talented and knowledgeable instructors. As well as for those of you getting ready to take your test, MEC offers many online and live webinar test prep options and packages to help you prepare for the national test. Check out the MEC website for available courses and live class schedules. Hope to see you in one of our courses soon. Before we begin, I must give a disclaimer per the NMLS. The purpose of these sample questions is to allow candidates to see the type of questions on the SAFE MLO test. They're not intended to be a study guide or fully prepare a candidate for passing the SAFE MLO test. So now, end of disclaimer. And one more thing. The NMLS website offers a lot of information on how to obtain your license, the testing process, what to expect, and so on. But some have found it kind of hard to navigate and find this information. So we want to give you this link that takes you directly to the page where you can find this information. Our approach here is going to offer you an explanation and additional insight that you won't get from just reviewing the sample questions on the NMLS website. We're going to help you understand not only the answer, but more on the specific topic being addressed. Here's something to think about as we review these questions. These questions are most likely not the exact questions on the test, but are to give you the types of topics you'll be tested on, even the way the test questions are structured.
Wow.
So in your preparation for taking the test, many people take the approach of only reviewing sample tests and hope for the best. While sample test questions are vitally important aspects to your study, it's extremely important to also have an in-depth understanding of the topic behind the question. Because the actual test question will be totally different than any sample test question you may have taken prior to your test. So having an understanding of the topic will enable you to have the correct answer regardless of how the question is worded or presented on any given topic. So let's dive in. Question number 1. Included in the loan estimate, all of the following are part of the finance charge except the A, the appraisal, B, VA funding fee, C, per diem interest, D, origination charges. Give you a moment to think about that. The correct answer is A, appraisal cost. This topic is related to APR, or annual percentage rate, which is the total cost of a loan expressed as an annual rate. So why is the appraisal the answer? Think of it this way. If someone is paying cash for a house, they wouldn't be using a lender, and then there would be no loan. The appraisal is a best practice for purchasing a home, whether paying cash or financing. The word finance charge means cost, which APR is the total cost of a loan. Remember, the total cost equals the closing costs, as well as the interest paid over the life of the loan. All of the other answers are related to financing or would only be incurred if you were obtaining a loan. If this topic is still challenging to you, please be sure to review your course material. Let's go on to question number 2. A buyer has made an earnest money payment of $5,000. The buyer pays an additional $2,000 in option money to be credited at closing on the property with the sale price of $160,000. If the required down payment is 20%, how much additional money will the buyer need to provide toward the down payment at closing? A, $25,000, B, $27,000, C, $30,000, D, $32,000. So let's break this question down before we tell you the answer. This question has a lot of moving parts, so let's analyze a few things. The buyer puts down $5,000, plus an additional $2,000 will be applied at closing, so there's $7,000. Now, write that number down and let's move on to another point. The question states the required down payment is 20%. So simply calculate what is 20% of the sale price. If you remember your basic math, it would look like this. 20%, the word of always means multiply, so 20% times $160,000, which gives you $32,000, the total needed for the down payment. But our buyer has already given $7,000, so we simply subtract $7,000 from $32,000, giving us the correct answer of A, $25,000. But let's dive a little deeper. This topic has to do with LTV, or loan to value. What you need to understand about LTV, and you should practice, is knowing how to calculate it different ways. Because sometimes you'll be given a lender guideline or a requirement of how much is needed for the down payment, such as we did in this question of 20%. While other times, a scenario might be a borrower informing you of how much money they have to put down, and you'll have to calculate the LTV based on this type of information. Remember, LTV is loan divided by value. But some of your calculations might not be as straightforward and may require additional calculations to obtain the correct answer. Based on this NMLS sample test question, everyone can count on being tested on LTV, since this will be an everyday function for a mortgage loan officer. So study further if needed. Let's move on to question number 3. If an applicant works 40 hours per week and is paid $13.52 per hour, what is the applicant's monthly income? Now here are the answers. We put them up on the screen. A, B, C, and D. For this answer, you simply calculate 40 hours per week times $13.52 per hour, giving you $540.80 per week. Now stop there. Here are some rules to remember when calculating income. There is no such thing as 4.1 or 4.2 or 4.3 weeks in a month when calculating monthly income. Once you have your weekly income, you must always calculate the annual and divide by 12 to get the monthly income. Again, you must always calculate the annual in order to get the monthly. Never forget this rule and you'll always get the right answer. So to finish our math, you simply take $540.80 times 52 weeks, because there's 52 weeks in a year, giving you $28,121.60 for our annual income. Then we simply divide by 12, giving you your answer of letter B, $2,343.47. Now, I want to be sure to add one other tip here for you. Be sure when you're always calculating income and any math in mortgage, take everything out to the penny, so 2 decimal places, whether it's income, debt to income ratio, LTV, and so on, 2 decimal places and down to the penny. Then, when you get your question, look at the answer. Sometimes the answer might be a rounded answer and so on. But in real mortgage practice, we take everything down to the penny and 2 decimal places. Also, remember, 52 weeks in a year and 12 months in a year, and you should always get the correct answer. The only exception to this is when you're already given a monthly income, there's no further calculation since you already have the monthly income. Obviously, there's more to know on this topic, so if you're struggling with income calculations, be sure to put some extra time into this prior to taking your test, since this too is a daily function of a mortgage loan officer. So you can be certain you'll be thoroughly tested on this. Let's move on to question number 4. The requirement for private mortgage insurance, or PMI, is generally discontinued when the loan-to-value falls below 20%, 50%, 80%, 90%. The answer is C, 80%. Now, there's another LTV requirement pertaining to PMI, which is 78%. And for this answer, you might be thinking, I don't see 78% in the available answers. So this is a good example where you might have to select the correct answer from the choices given. The ambiguous wording within the question is generally discontinued, is the words. This could be at 78% when it automatically falls off if the mortgage payments are current, whereas the homeowner has to request the removal of PMI at 80%. So again, this question gives you insight as to how questions are worded. Since 80% is the only correct answer given, the correct answer is 80%. Let's move on to question number 5. The unique identifier of any person originating a residential loan must be clearly shown on all of the following documents, except we got business cards, company websites, residential mortgage loan application form, Consumer Financial Protection Bureau, or CFPB, special information booklet. And the answer is the Consumer Financial Protection Bureau special information booklet. By the time you take your test, you should have a thorough understanding of the SAFE Act and its requirements. Your unique identifier, or NMLS, goes on everything from the loan documents to all advertising items, email signatures, websites, and so on. Be sure you know the SAFE Act requirements before taking your test. Now that we're about halfway through our sample questions, I want to again remind you that Mortgage Educators in Compliance, or MEC for short, offers everything you need to prepare you to become a licensed mortgage loan originator. From the 20-hour pre-licensing course, including all state-required courses in an online self-study version or live webinar with one of our most talented and knowledgeable instructors, as well as for those of you getting ready to take your test, MEC offers many online and live webinar test prep options and packages to help you prepare for the national test. Check out the MEC website for available courses and live class schedules, and we hope to see you in one of our courses soon. Now back to our questions. Question number 6. According to the Truth in Lending Act, or TILA, the term refinance applies to A, a reduction in APR, B, a change in payment schedule, C, the renewal of a single payment obligation with no change in the original terms, D, the satisfaction of an existing obligation and its replacement by a new obligation. The correct answer is D, the satisfaction of an existing obligation and its replacement by a new obligation. If you did not get this one correct, you should review your course material on the Truth in Lending Act. Now let's look at these answers to give you some insight. A reduction in APR. This would be one of those throwaway answers where you should know this one doesn't apply at all. The terms used in this answer don't even go together or apply to the question. Let's look at B, a change in payment schedule. On the surface, you might think changing the payment, okay, but is there a better answer? So before we select this one, we need to be sure we read all the answers because sometimes you may be required to select are you ready for this? The most correct answer. You see, when refinancing, you do change the payment schedule, but might not always happen. Let's say you originally took out a 30-year loan, but now you only have 20 years left to pay. When you refinance, you now take out a 20-year loan. So in theory, your payment schedule might not have changed. Notice it doesn't say your payment changed, but your payment schedule. Let's look at C, the renewal of a single payment obligation with no change in the original terms. This might be an okay answer at first, but we need to see if there is a better answer. For example, the first part of the answer sounds okay on the surface, but the second part, no change of the original terms, does not hold true, since a refinance in nature does change the original terms. So we're left with D, the satisfaction of an existing obligation, which is true because we are paying it off. That's what the word satisfaction means. And its replacement by a new obligation, which is also true since you obtained the new loan. Question number 7. Which of the following documents does the mortgage loan originator use to determine the estimated value of the property based on an analytical comparison or similar property sales? An appraisal, an area survey, a market survey, a cost-benefit analysis. This one, the answer is A, an appraisal. This one should have been pretty easy, but here's what's important to know. You could have questions on the appraisal process, and anything pertaining to the appraisal. So it's important to brush up on the topics prior to the test. For time's sake here, I don't have time to explain these, but I'm going to give you a list of a few terms and acronyms. If any of these are unfamiliar, please go back to your course materials. AMC, or Appraisal Management Company, 1004, the Fannie Mae Appraisal Form Number, AIR, or AIR, Appraisal Independence Rule, HVCC, Home Valuation Code of Conduct, Market Approach, Cost Approach, Income Approach, Comparable Sale, Non-Arm's Length Transactions, and so much more. Question number 8. According to the Equal Credit Opportunity Act, or ECOA, which is Regulation B, age discrimination by a mortgage lender is acceptable. Now, here's our answers. Not under any circumstance. The next one, only if the applicant is too young to enter into a legally binding contract. C, only if the life expectancy data indicates an applicant will not be alive at the end of the loan term. Or D, only if the applicant is too young or too old to understand the ramifications of defaulting on a legal debt. The answer is B, only if the applicant is too young to enter into a legally binding contract. Now, for this one, let's take a different approach to our evaluation, since an acceptable answer might have been you are never allowed to discriminate, right? But yet the question asks, when are you allowed? So you already know this question is going to be a tricky one. And the answers will either be so easy to detect, or the answers will be so close to each other with just a few word changes in each, making it really difficult. You're going to have to read both the question and the answers carefully, and with many questions more than once. Let's look at the answers. On the surface, A, not under any circumstances, seems like the correct answer, right? Let's look at the rest of it. B, only if the applicant is too young to enter into a legally binding contract. That's also correct. Okay. C, only if the life expectancy data indicates an applicant will not be alive at the end of the loan term. This one is kind of convoluted, so if I had two other answers that seemed more correct, then I'd eliminate this one. Letter D, only if the applicant is too young or too old to understand the ramifications of defaulting on a legal debt. Another somewhat convoluted answer. So now it's a toss up between A and B, right? We've thrown out C and D. If you understand ECOA, per HMDA, Home Mortgage Disclosure Act, you can only ask age to see if someone is of legal age to enter into a contract. That is a correct answer. And marital status when the loan is joint credit or secured versus unsecured due to title laws that require such information. And even race, ethnicity, and sex, even though all of these would be considered a violation of ECOA. What throws some people off with this question is the wording that implies discrimination is acceptable, but rather you're not or never discriminating. Just note for this question specifically that you are only asking age to see if someone is of legal age to enter into a contract. So you're not really discriminating, but in a sense you are, at least for the way the question is worded. Can you see the trickiness to the question? But more importantly is to have that full understanding of ECOA. So you'll know, regardless of the way the questions or answers are worded, you can still get the correct answer because you have an understanding on the topic, not that you memorized information just so you can pass the test. Question number 9. When a client's property is being appraised, a loan underwriter might take all of the following actions, except request a second review of the appraisal, ask the appraiser to consider additional property information, ask the appraiser to correct an incidental error on the appraisal, inform the appraiser that the appraised value is contingent on the client's retention of the principal dwelling. Well, for this one, D, inform the appraiser that the appraised value is contingent on the client's retention of the principal dwelling is the correct answer, meaning that's not allowed. As we talked about in the previous question, having an understanding of all aspects of the processes surrounding and involving the appraisal is going to be needed for your test. Here's another aspect, but also requires knowledge of different aspects of the mortgage process. This question gives you insight of the compound nature of questions you might encounter. First off, you'll need to have an understanding of HVCC and AIR, which I just mentioned about in a question, where a loan officer or a lender cannot talk directly to an appraiser or influence the valuation or the report in any way. So this question includes federal laws, right? But also ethics, because it's something you shouldn't do. It involves the appraisal for sure, and it involves processes that can occur on every single loan. So be sure to have that big picture view for your understanding. And finally, our last question, but I'll have some important things to say afterward, so you'll want to stay tuned. Question number 10. According to the Truth in Lending Act, which of the following fees is excluded from the calculation of APR? A, wire transfer, B, prepaid interest, C, hazard insurance, D, mortgage insurance premiums. The answer is C, hazard insurance. Now, while this is another APR question, this tells me APR is important to understand for your test. Please rewind this video to listen again to the instruction given in the first question of this video. APR falls under general mortgage knowledge for sure, but also falls under loan officer activities because you have to disclose on the loan estimate and the closing disclosure. You need to know how to explain it to the borrower, but you'll need to understand how APR is developed. Not how to calculate it, just that you need to know what goes into it. What is its purpose? To allow consumers to shop accurately and compare loans, to allow consumers to shop and compare loans accurately, but also is a test for a qualified mortgage, which is what you're going to be originating daily. You'll need to have a good understanding of qualified mortgage for your test. There's so much more we could say on this and other topics, but we're out of time for this video, except to remind you, you will need to study prior to taking your test and have knowledge of all topics because you can be tested on anything. Some of you might never get a question on a specific topic, while others might get 2 or 3 on the same topic. The NMLS designs the test so that no two people ever take the exact same test. Before I leave you, just a few parting but important comments I told you I'd leave at the end of this video. This sample test gives us more insight than just the types of questions you'll be asked, but more so the topics and the way the questions will be structured. We had questions on the SAFE Act, which is part of the uniform state content. We had federal law questions, but we also saw a crossover between questions pertaining to federal law and general mortgage knowledge, and even mortgage loan originator activities, the things you'll be doing every day for the rest of your life. We even had an ethics question, which we also had some crossover with having the understanding of daily mortgage activity. If you've noticed, these are the 5 categories you'll be tested on. The NMLS also has an outline of topics you could be tested on. You'll need to be using that during your test preparation. But even more important is we reviewed how the questions might be worded or presented or structured, and how to evaluate the answers if you're unsure of the correct answer, and that you might have to select the most correct answer of the answers listed. We realize this is just a short video and there's so much more we offer at Mortgage Educators and Compliance. I want to remind you all at Mortgage Educators and Compliance, or MEC for short, we offer everything you need to prepare you to become a licensed mortgage loan originator. From the 20-hour pre-licensing course, including all state required courses in an online self-study version, or live webinar with one of our most talented and knowledgeable instructors. As well as for those of you getting ready to take your test, MEC offers many online and live webinar test prep options and packages to help you prepare for the national test. Check out the MEC website for available courses and live class schedules, and we hope to see you in one of our courses soon. Thank you for watching, and please watch this video again and as often as necessary to make sure you have the necessary understanding prior to taking your test. Thanks again for watching.